So we're going to use the same techniques that we used for the E-mini NASDAQ to analyze CL and see what we've got here. Today is February 8th, 2018, and we're using the daily cycle marker tool. We also have the Tachyon Orion tool. We're going to put that on here too, and I want you to just see that both of these predictive indicators from the alpha package are really good at helping foretell what the banks are planning to do at that point in the future. Okay, so I'm going to create two different charts. We've got the Orion chart on the left, and let's go ahead and open the daily cycle marker chart on the right hand side for CL. Again, keep in mind that both of these are predictive indicator analysis tools, which is what I love about them. There's no lag to it. Okay, and let's see what we can find here. Alright, so it's my contention that CL has always been more predictive using the Orion tool. And if we look here on the chart, you'll see that there are two components at play today. One is a 120 period exponential moving average. It weights the average a little heavier towards the front, so it's not as laggy. We have the price bars, of course, on a daily bar. And then we have the Orion tool, which is analyzing time and projecting high and low energy days forward into the future. So everywhere you see a red dot on the chart is a phase A event, and in the upper right hand corner you can see that it's telling me the next phase A event is in 2 days, 15 hours, and 32 seconds. The next phase P event is in 18 days, and that'll be a green dot, and that occurs in 18 days, 15 hours, 31 minutes. And the next phase A event after that is 30 days and 15 hours away. So each one of these dots was a day that we've known about at least a month in advance, which is pretty awesome. If you think about it, this indicator, probably more so than any of the other indicators, has a greater tendency to really emphasize that these moves really are planned in advance, to be that precise as we go. So let's take a look at the sequence of events since like summertime forward into the fall, and I want you to see there's an actual narrative that's taking place here. The signals that we're going to focus on first are the ones that are in that guide to the histogram, pattern 4s and 5s. And right here in November, we had a pattern 5. Way back over here, we had a pattern 4, which is simply a selling pressure at a lower low, plus or minus 1 bar, and a buying pressure at a higher high, plus or minus 1 bar. So these were places that the market was moved quickly to, kind of ushered over to in the course of the session. And we're presently dropping from this $66 area. Now, one of the things that's important to note is that since right here, since June, July, I want you to notice the green dots in relation to where price action is. And what you'll start to notice is that price, when the green dots are not a pattern 5, when they don't have a red arrow over them, that price is staying above the green dot most of the time. Okay, so from this point forward, with the exception of this signal right here, that little anomaly, we've maintained a solid push up at each one of those points. And you could make a case for this pivot right here on January 30th in CL as an attempt to push it higher. Okay, but we haven't seen any kind of collapse like this in crude at a phase P event in that entire run up, meaning when we got to here and we see that drop, something changed. Okay, something very significant happened there. So one of the things that I like to do when I see that kind of event is what we did in the NQ yesterday. I want to break down the circumstances surrounding this pattern and see if it's something that the banks have tried before in the past. I don't believe anything that happens in this market is accidental or coincidental. I think that they're running a play. Okay, so this to me signifies a trend reversal when I see it. And so let's take a look at the components that are involved with that. Number one, we had a phase P event followed by a breakout of that. Okay, so that's the first component. There was a pivot at the phase P, then there was a breakout into a higher high, then there was a pullback into the phase A, there was a lower low, and then a breakdown. So pivot, breakout, lower high, collapse. Everybody with me so far? Now, crude's been around for quite some time. This can't be the first time that pattern has occurred. So if we identify this pattern in the past, we can project forward into the future with some modicum of understanding what to expect or what we could expect over here to the right. And so now what I'll do is I'll just kind of look back into the past for a pattern that demonstrates that kind of reversal. That is to say, a green dot with a pullback and a lower high, and then the collapse. Okay, so to do that, let me just come here. This might be an easy way to do it. I'm just gonna pull this down. How about that? Let's take a screen grab of it, and we'll just collect it over here. Okay, so I've got the chart auto-focused. Now take a look. If I come over here, here's an example of one signal that closely represents, but not exactly, what happened over here. So Larry, check it out. There's the phase P event. There's the double top with the green dot, and then there's the collapse right here. Do you guys see that? Right there. It's not perfect, but in the sequence of it, it's demonstrating some of the elements of the pattern. Okay? Let's take a look a little further back and see if we can identify a pattern that looks even more like that one. Here's one that again has some of the elements involved. Tell me if I'm completely off base. We have a brand new high. Larry, here's the first element with the punch through, right? Then we have the pullback into the green dot. And Larry, this one wasn't a lower high. In fact, this one was a higher high with divergence instead of coming down. But then we had a collapse down through that. And the overall trend after that, here's what I'm trying to establish with you. From that point forward, from the collapse of the green dot, it was a sell-off. Okay, this area here represented a high, in the same sense that this area here represented a high, meaning when we got to this, when we got to the next phase A, it dropped again. Okay, so let's call that the third component. I'll put a 3 over top. 3, component 3, component 3. Alright, so we're looking for brand new highs with a phase A followed by a pivot at the phase P with a double top. There was a sell-off here. Okay, nothing really here that speaks to that. Another sell-off there. No. I mean, this one, there's an element of it, but it's not a good match. Again, we see when there's a double top here with a drop or a collapse, the next phase P event, where I've been putting a number 3, phase A event, forgive me, is a drop. Let's keep going back, see if we can find a better element to reference. Higher high, green dot, double top, and then a collapse. No. Here we go. Alright, this is kind of spooky actually. Here, check this crap out. What's spooky about this? Who can tell me what's really spooky about this chart? Somebody has to have spotted this by now. Dennis, do you see it? Mike, do you see it? Juan? Ron? Chris? What month is it right now? What month are we living in right now? Okay, we started saying that today was February 8th, right? Okay. Chris, can you see what year and month this pattern is in? It's 2013, February 4th, February 12th. Alright, look at the elements of the pattern. Ready? Phase A with a pivot. That qualifies, right? Phase A with a pivot. Larry, then we have a breakout right there into a higher high. One, then we have a lower high with a pivot at the green dot. And then a collapse. Ironically, too, the signal before that was a pattern 5 right here. And if I come back, let's put a giant yellow rectangle here to remember how to get here. Chris, can you see how this was a pattern 5 also? This green dot was a higher high just before that red. They were pushing the market up into that pattern. So it's like a boxing combination. 1, 2, 3, drop. 1, 2, 1, 2, 1, 1, 1, 1, 2, 1, 2, 3. It's a boxing combination. And so if we come back 5 years, it's not until 5 years ago at this point in time that we see that. So come all the way back right there. It's an exact match practically for what we saw taking place, in which case this phase 3 again, not phase 3, phase A is a drop point. Okay, let's see if we can get some information from here in terms of where is it headed. So structurally, if I take the high and the pivot low of the phase P, that box, I'm going to measure how far did it drop out of there. And it fell 1, almost 2 values of that consolidation area out. Okay, so it's like 1.8 of that box. Let's come over here, do the same thing on CL. There's the pivot. Okay, so we're going for 1.8. It's gonna be somewhere around here. Looks like it's making a run to the moving average. If that's the case, somewhere around $58, if that measurement is correct. Come back to that pattern here. So we go too far. 2011, yeah, we went too far. There we go. Okay, so that it definitely made it to the EMA, and in this case it broke down until the next phase P event where it shot back up. This was back when we were in the $100 plus range too. Okay, let's see if we can find one more of those. It's also important to note that it came back a second time to this trend line after that. Can everybody see that? It came all the way back one to the resonant angle there. So where we are in the present, Ernie, I'm predicting that we will be back. I'll be back. We're going to be back up to this level by how much time? Excuse me when I go look for it. Okay, from that peak to here. Okay, so I'm going to copy and paste this and bring this rectangle over here. If you just indulge me here. Okay, so there's the rectangle from the other. That's very interesting. So guys, this rectangle is the one from 5 years ago. I'll change the color. And Ernie, do you notice how it's about the same size? vertically as the one from 5 years ago was. It's off by 69. It's off by 30 ticks in terms of the height, the depth of that move. Okay. So that puts us back at, if the time component is correct, that puts us back at 62.69, it looks like, 62.60s area, 62.50, 62.60 area. If it does come down, if it does make it all the way down to here, it puts us back in that pocket before March, looks like the middle of March, towards the end of March. Okay, so a deep retracement down and then a pullback at least into the 62.50s by the end of March. How you guys feel about that? That's a lot of information from one indicator. I'm going to take one more peek to see if I can't find anything. That's May, April. Okay, there's a similar pattern here. This is, I guess it's a spring pattern almost. March, April, May. If we look at where we are in February, they have a double bottom instead of a double top, and it goes the other way. But Chris, check it out right here. Here's the first component. It's not a match. It doesn't pivot here. It stops. There's the breakout. Okay. Then we have the double top with the green. It blows through the double top. There is, however, a pivot right here. And instead of going down to the next phase A event, it goes up and then drops and then collapses. So this to me represents a fake out pattern up here. It represents a termination, a high. This was up near $140, and you can see what happened after that. So do you see the elements of that? A breakout of a phase A event, a pivot at a phase P event. There should be a collapse of the phase P event, but the next phase A event, 1, 2, 3, is a drop. If we measure the height here, and copy paste, how many times did it fall before it terminated and reversed? Here's one. Ready? There's two. Almost 2 boxes. So again, there would be that kind of 80% range right here that we were looking at. So this pattern back in 2011 resembles this pattern in 2013. Same kind of thing. Ernie, do you see it? There's the fake out 1, 2, 3 drop. How far does it drop? It drops one of the boxes, almost 2 of the boxes. I'm curious if we measured that amount, what the exact fib number is. So let me come in here. Is it 180, do you think? make this one thicker so it pops out. Yeah, so there's 180. Let's save this as default. And now let's go back to the other one and measure that one. So that's 180. I don't know if there's a fib there or not. So a Fibonacci number. So on that one, Ernie, it puts us back to 58.33 if they follow that same pattern. 58.33. Okay, and then once it hits that, the return back up, woo, once it hits that value, there is a return. So in this case, it went from 116, it went $9 up there, here it went $8 back up. So when it hit the 180, it went $9 on the first one, $8.10 on the second one. Which I think that's pretty cool. They're within $1 of each other with patterns that are almost identical. I think it's pretty unbelievable. Okay, here's that one pattern, Ernie, that I said looked close, but it wasn't identical. There's the 180 right here. This one had a much bigger stop, and you can see, can you see where it's bouncing and falling around that resistance level at 49.15? It comes up, hits it, comes up, hits it, closes above it, touches it, comes up off of it. I'm curious what the measurement is off of that line from here to here. $7. The eventual move up is $8.50. So if it pulls back, Ernie, to this 180% level, we're expecting an $8 to $9 retracement with a minimum $7 reversal. Does that make sense what I'm doing here so far? We're just looking at these patterns in the past, measuring them, the proportions of them. Man, that's freaky. Freaky dicky. Okay, so in the case of this example here, the 180 is right there. So it's 180 by the phase P event. So it's 180 by the phase P event. Okay, this case, the measurement from the 180 to the leg is $9. Okay, so what we've discovered is a pattern that involves a push-up through a green dot, which is a pattern 5, that involves a reversal at one of the red dots, or the phase A events, a breakthrough there, some type of topping formation, and then a drop of the topping formation of 180 to 200% of the topping formation on or by, the big drop coming at the next red dot, lasting until the next green dot, and then anywhere from a $7 to a $9 reversal back up off that 180% mark. That's the pattern. And those patterns are generally happening February, March, April, going back as far as 2013 and 2011, nearly 5 and 7 years ago. We shall see what happens here. This was using the tachyon alpha. And so if we hit the 180, $9 back up would be $7 to $9 back up would be, if we came here, which looks like an MA touch, that would be 58 to 65 would be a $7 move. And then 58 to plus 8 would be 66 to 67. So somewhere in here. All right, guys. That's what I got. We'll see what happens.